Make sure you watch the video all the way through. Later in the video, I will be talking a lot about the weekly chart, showing you some amazing signals on the weekly chart and talking about the market structure of why we're likely to go down to the 300 week or below the 200 week anyways, and towards those 200 and 300 week moving averages. Watch the video all the way through. Possible warning sign that the rally may be coming to a conclusion here. Rejection at the purple line, red circle possibly telling us momentum is about to shift back down. Still watching this bear flag pattern. We're rallying up to the 50 period. Right now at the moment during this session, we're getting rejection there. I have mixed signals in the daily time frame here. We're still bearish, but other signals are bullish. They're mixed because we're going sideways, but we're testing a key level at 74,000. Okay, Friday the 13th. It's Friday the 13th. The Bitcoin session is positive, up currently 1.58%. It had a rally above the 50 period moving average. That's the green line you see on the chart here. It had moved up at the intraday high back to test the previous high, getting a slightly lower high, back to test this high over here, and trying to get back above the 50 period moving average. It was up 4.79% at the highs of the session. Session's not over yet. We still have several hours left in the session, but we're going to be watching. Do we get a lower high and turn down off of this 50 period moving average and get a topping tail as we're trying to form right now? Or do we close strong? Do we close weak? We still have a rally, 1.56%, but again, we were up nearly 5% at the highs of the session. There's major resistance at this 74,000 area, the area that we reached testing that April low, April 7th low at 74,000. We tested it right here. Our high today, 73,968. So just right at that 74, just right under that 74,000 area with today's high. Measured move played out. I talked about the measured move. Even though I predicted this rally, I told you it was going to fail. In late December, early January, January 2nd and 3rd, late December, I predicted that the rally was going to continue up to this trend line, the 100 period moving average. It did, I told you, but it would not exceed 98,900. We peaked at 97,900, and I told you that we were going to take out 80,000, moving towards my target of 50 to 52% sell-off, which was 60 to 63,000. That was my minimum objective target, expecting a 50% decline. My first objective was the 74,000 area, which was a 41% drop, which we reached, blew right through it. Now we're testing that level. We broke it. Now it's being tested. I think Bitcoin will likely bottom in the near future, but it will probably do so under 60,000. Now I'm not talking about a bottom ending the sell-off, ending the crash. Talking about a local bottom that will be followed by a powerful bear market rally. I hope it gets back above 100,000. There's no guarantee, but we'll be on our way back up to test 97,000, either getting a lower high below it or a higher high. If 60,000 is the bottom, I need to see more evidence of that. I don't see evidence of it. Some momentum is trying to turn bullish here, but again, you're rallying up into a declining 50 period moving average, the green line. The rise in crude oil has been creating volatility in the stock market, which again is now going to play catch up to Bitcoin. The ongoing Iranian threat of ships being attacked that going through the Strait of Hormuz has pretty much closed it down here. And the Iranian mine-laying ships, vessels, boats, recently been struck, but there's still concerns that there may already be other mines in the Strait of Hormuz for fear of being attacked. And we did see Iran attack a few ships this week. So the insurers, global insurers, and the shipping companies still very reluctant. The United States can have the Navy escort ships through it, but that likely won't be for a few more weeks. Continues to keep oil elevated and markets concerned. Another thing is the sleeper cells in the United States. We've already had a couple of harmful attacks. There's the FBI is warning about a potential strike on California. Apparently, some leaked information whether Iran has that capability to launch a strike on California from Mexico or boats off the coast of California remains to be seen. But just again, if something major happens, it could rattle markets. So just be aware of that. Whether that's going to be the case, we don't know. We pray and hope that nothing like that happens, but it could rattle markets if it does. This bear flag, and again, could be getting a lower high here. If this is a wave 1 and 2 here for my 5 leg push lower for 5 primary waves for wave A. If wave 4 is not done, again, wave 4 question mark up here. If we tag this upper boundary again or go above it to this other trend line, deeper into the resistance zone between 74,000 and 80,000. The low over here and the low back in April is the resistance zone. Right now, we're getting rejection at the 74,000 area so far. Today and previously back there in early March. I eventually think we're going to go down and reach one of these trend lines in all likelihood. I think you could form an inverse head and shoulders pattern if that's the case. If we drop, pop back up, and then either get another push down for a right shoulder or a deeper move to get a higher low. So again, can get more waves of selling that could be associated with the S&P catching up as Bitcoin forms a bottoming process. Bitcoin sharply declined as the stock market went sideways. Bitcoin could go sideways as the stock market plays catch up. The stock market doing what Bitcoin did at the top back up here. So this is one of my counts right here. This count's still in play with this primary wave 5 suggesting a 1, 2, 3, 4, and 5. If this wave 4 is not yet done, it might be. It's not a wave 4. It might be an entire wave B on my alternative count. And if we look at my alternative count, again, I've marked this with the blue count here, a very large W, X, and Y move here. Y coming in down over here, or maybe taking longer than I've marked here, which means that we could have a possible ABC move. That's the count right here. Let me move this. Let me just move some things here so you can see it just a little bit better. If we completed at 97,900, if we completed the W and the X, and now we're in the Y, then again, it could be we have a larger ABC, A. This could be a B here, or even if we go a little bit higher, B, followed by a C down to, again, one of these trend lines or the major horizontal support. Under that, we have the 50% retracement of the entire advance. So this count says that the sell-off is going to unfold in a 3-leg push down like what we had right here in this scenario. This count is still very much in play. Elliott wave is determining price direction by the process of elimination. So both of my counts are still very much in play. This count has some real possibilities because on the other count, the wave 4 would be much bigger than the wave 2. That doesn't disqualify it as a wave 4, but very well could be that this is an ABC followed by this in a larger A and followed by a larger B, and then we get the C. And again, the bottoming process may take longer than we think. If we come down and take out 60,000, as I think is likely going to be the case, it may take longer than we all think. This may go on into April. Or if we go sideways to form an inverse head and shoulders, maybe it drags out on into May. These things can take longer than we think. The topping process here went from July all the way to October. It took months. In the 4-hour time frame, we just completed a topping tail in the form of a shooting star just slightly under this area at key resistance at 74,000, just under 74,000. That's an important resistance level. We've had the 50 in the 4-hour time frame get back above the 200, but if we drop back below those levels, our bear flag pattern can play out. And again, we might get a 5-leg push down, or Again, this could be an A, a B, and we get a C move down, a sharp C move down, if we have that three-leg structure as I talked about on my alternative count, which is still very much in play. The RSI did go slightly higher than the previous peak, so there is no divergence, but we do have, with this lower high, the stochastic rolling back over any divergence in the more recent price action on the stochastic forming a divergence here with this recent price action. And again, the bear flag is a continuation of this previous decline. So we'll see if the topping tail high holds. Here in the 4-hour time frame, we have a topping tail in the daily time frame, but the session is not yet over for the daily chart. It is here over for the 4-hour bar that completed that topping tail. Now the RSI in the daily time frame is pulling up back up to the 50 level. Again, we're getting a slightly lower high, trying to get above the 50 and then getting rejection at it. We'll see how we close. You have this falling channel back over here at 97,000. Even though I predicted this rally, even though back over here I predicted this whole rally, and then over here I reaffirmed that the rally would continue up to the 100 period and up to this trend line. And I told you, as we are moving towards that level and as we reach that level, the Moon Boys had better pray that this is not the new expanded falling price channel, because I was predicting that it was, which means that we're going beyond 60 to 63,000, my minimum objective target. That's where we reached it. All these people telling us 60,000 is now the bottom, just like they told us 80,000 is the bottom, just like they told us 99,000 was the bottom, just like they told us 103 and 105,000 were the bottoms. Remember, I'm the guy that called back up at the top for Bitcoin 60,000, and they laughed at me, they mocked me, told me how stupid I was, yet I was right. You see, I'm not biased. Everybody telling us that we had a breakout at the top, I told you it was a fake out. There were major resistance levels there, and the 4-year cycle was coming to a conclusion. The people telling us we have a bottom here, they're biased. I don't care which way Bitcoin goes. I'm a trader. I'm looking to close the rest of my short position. I'll be looking to go long. And again, I'm looking to swing trade these moves over weeks or position trade over several weeks or months. And you don't know how long a move will last. So again, I'm looking to either position trade it or swing trade it. But here, again, I'm looking to play the main movement up, the main movement down. We're going to get another main movement back up towards the 200 period, maybe overthrowing it towards 97,900. I'm hoping we reach 100,000 again. No guarantee of that, but it's possible in the bear market rally we get maximum FOMO, because the rally will likely be associated with rate cuts, jumbo rate cuts from the Fed. The stock market plays catch up to Bitcoin. The Fed will finally panic. Odds of rate cuts are becoming less likely right now based on Fed fund futures because of crude oil rising, concerns about inflation, concerns about a weakening economy, as I correctly predicted would be the scenario. The narrative is going to be the Fed can't cut. I'm telling you, inflation is going to tick higher and the Fed's still going to cut. That's what they did back in 2008. Eventually, we'll get a deflationary bust. Inflation is going to go higher, as I've been predicting. We'll be watching to see if one of these two trend lines eventually is tested and there's key support under there. If we break that key support, we'll be looking at the Fibonacci, the 50% retracement Fibonacci. And if we turn back down, we turned off of this 50 level on the RSI, you turn back down below it, you get rejection here at the 50, you get drop back below the 50, you'll reaffirm the previous 50-50 sell signal. When we drop below the 50 here and drop below the 50 back here, try to test the 50 here, getting back above the 50 on the RSI. Now we're trying to get back above the 50 and trying to get back above the 50 level on the RSI. If we turn here, as you so often do at this 50 level on the RSI and the 50-day moving average, will reaffirm the previous bearish 50-50 sell signal. When we drop below the 50 period moving average, I call it a 50-50 sell signal. You drop below the 50 period moving average, we had gotten back above it here to get this counter trend in the form of a bear flag, or in this case right here, a rising wedge, and then you saw the RSI drop back below 50 and price drop back below 50, and I call that a 50-50 sell signal. Will we reaffirm a 50-50 sell signal here in the daily time frame? likely going to be that we see a divergence develop in the MACD. It's likely going to roll over here. A little hard to see with my annotations on the chart, like different scenarios that can play out here, but I think you're going to end up seeing a divergence. MACD is coming right up to the center line. I think it will end up rolling over and you'll see a divergence. I think you'll see a divergence likely associated with a bottom, and I think you've got a strong possibility of that still being in play here on the RSI. The RSI could come back down and still diverge with this low at 60,000. I told you there was no divergence at 80,000. Told you I saw no evidence of a bottom, but we could see a divergence develop here on the RSI and the MACD, much like what we had over here. Here we had a multiple point divergence here back in April. Again, took from late February on into April to develop that bottom. Same thing with the top. Again, we went sideways. On the weekly chart, we formed a double top here on the daily, a triple top, but within that third peak or the second peak in the daily time frame, you form this head and shoulders, and again marking a triple divergence there. So sometimes these things take time, and if we do form a diversion, if we do form a bottom, could be associated with a divergence on the RSI and the MACD. Please support the channel. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like my charts, and you will, and if you like my indicators, and you will, and if the videos are educating you, and they will, then please consider supporting the channel. Follow the link below. It'll take you to a secured site, and you could donate any amount you want or make it a recurring donation. If you could take a moment to do that, I would really appreciate that. Anything helps. Please let me know that you want this information. This is the information that I use to make my decisions on Bitcoin. I don't know about you. My indicators really help me. They've helped me be a successful Bitcoin trader. If you find that cutting edge information helpful, then please support the channel. And I just ask that you do that rather than getting sponsors. Most YouTube channels have sponsors. That's how they make their money. I choose not to do that. I don't want to send you to the next exchange that's going to be going under. I don't want to send you to the next exchange that wants to get the newbies all leveraged up that don't know what they're doing to wipe them out. So I just ask that you do what you can to help out. You can figure out where you want to trade. I need to hear from you in order to make that work. So support the channel today. If you could take a moment, once this video is done, to step up to the plate and help out, I would appreciate it. I would be very encouraged hearing from you. I thank you for your consideration for that. For the week, we're up 8.5%. Again, I still believe we're going to bottom around the 200 and 300 week moving average. I think it'll be a local bottom. Once we get the next leg down, the Moon Boys, the experts have heard, they will become convinced, absolutely convinced that that is the bottom. I've said the 200 and 300 week, the black line is the 200, the red line is the 300 week. They've been associated with bottoms over and over again. And again, I think we'll bottom there, bounce, get a bear market rally towards the 100 week or the 50 week, or maybe even above them if we can possibly get a bigger bear market rally back above 100,000. So this is support, this is resistance, and this is one of the reasons why I don't think the bottom is in yet. And I do think we will bottom around these moving averages, and there's key support here, as I'll show you up close in just a moment. Now here's a weekly chart up close, and I'm going to show you some weekly charts, so make sure you watch the video all the way through. It's some really interesting charts. We're bouncing just above at 60,000, off 60,000, just above our 200 week moving average. Currently in the high 58,000 range. If we come back and break it, again, our 300 week moving average is currently at 51,000 and some change, and in this key support area. And in this key support range, I'm looking at the 49,000 low, I'm looking at the low here 54,000, the low here 55,000, these lows over here. So this 49,000 to 55,000 area. I think that that will be the area that is tested near our 300 week, probably dropping below the 200 week moving average and bottoming somewhere in this rectangle between 29,000 or 49,000 and 55,000. We could wick below it. My guess is this level is going to hold, but I continue to warn you, we could wick below this range. You have the 50% retracement at 44,000 from the entire advance of the previous bull market. We had a rally last week. What was it, 11, 12%, whatever it was, and it fizzled out. We barely had a gain for the week. That gave us positive volume for the week, but it's really disguising the distribution that took place with that bar. And we may see another rally here fizzle out before the week ends if we get rejection at the 74,000 area. This is the area I'm looking at for a bottom. This horizontal support range, key support at these lows here, and I've excluded the shadow here, and it could even go higher up into this 55,000 area, and this low, this wick low down here. This is where I think you're going to bottom. When we get down there, the Moon Boys are going to be talking about the 200 and the 300 week moving average, slapping each other on the back, telling us how smart they are, calling a bottom. These are the people that never saw the top. These are the people that never saw the crash. These are the people that continue to tell us every dip is the bottom. We're so sure that 80,000 was the bottom, and I told you in every single video, 80,000 is not the bottom. I'm telling you, 60,000, likely not the bottom. We'll likely see the 200 or 300 week moving average tested and then move up to the 100 week, the pink line, or the 50 week to test 97,900, either get a low below it at a key Fibonacci level or a push above it, possibly moving above 100,000. Historically, that would move us above the 50% retracement. Historically, that has not been the case for the bear market rallies, but I'm hopeful that with the institutions involved and with the Fed probably going to be doing jumbo cuts as the bait for the rally, I hope and pray that Bitcoin gets above 100,000. It would be a beautiful, beautiful shorting opportunity if we got a bigger Fibonacci retracement. As I've said, there's been a change of behavior on the indicators. They're negative. Here we went negative, but then we firmed up. Negative and firmed up through the bullish phase in the weekly time frame after the divergence marked a bottom. And in the previous bear market, after the divergence, well, we moved into the negative region and we were negative until the bullish divergence formed. We're likely going to see something like this where the bear market, the crash to kick off the bear market, it's going to come to a conclusion, and then we get this big rally back up for the bear market rally. And we moved after the bottom here. We just move this so you see the bottom and reversal is validated with momentum going back into the positive region again and firming up around the center line. The change of behavior we've seen now, the market structure break. The reversal take place. We are in a confirmed bear market. The behavior has changed, but we're likely going to move back to this key support area right in here into this range. Signals here turn bearish the week after the top, and they've been bearish ever since. Again, no bottoming signal at 80,000, no bottoming signal at 60,000. You're likely going to see this level tested and create a bottom in all likelihood. This is a critical level of support. Turned off a critical level of resistance off of this trend line. I told you these highs from 2021 could be pointing to the next high. They were. With that rejection, the structure broke. It bounced at 80,000, and then the structure broke even more. I'm just going to bring up some of these weekly charts. Now, the bars are still red here. The bars turned bearish, again, the week after here. Prior to that, we had a topping signal right here. I talked about all these signals back at the top. Many of my weekly charts turned bearish the week of the top or the week after the top as we had bearish divergences in the weekly time frame. Bars have been red. We sliced through the 50, tried to bounce off the 100 period, and then sliced through that, and now we're just above the 200. Again, you'll bottom out around here, the 200 to 300 week moving average. I told you we could try to bottom around this trend line right here. So far, we've bounced off of it. It was support back over here. It was resistance over here, but we busted through it and then turned down. You could bust through it and then turn back up. tried to bounce off of it here at 49,000. So again, I'm looking at this area very closely, but I talked about this trend line long before we ever reached it. I was talking about this back up here, as we were moving actually towards the 100 period moving average and then bounced off of it. So just draw these trend lines after we reached them. I was predicting we moved towards them. And the 200-week moving average, I predicted that back up at the top. I think you'll bottom in this area somewhere. If we do bottom above 60,000, I need to see evidence of that. I don't see evidence of that yet. I do see some momentum trying to flip up here. I think it's more likely we take that level out and form a divergence in the daily time frame on the awesome oscillator, on the RSI, on the MACD. I think eventually we'll bounce around the 200 and 300 week moving average, get a powerful rally back up going into May or June, going on into the summer maybe. Then I think we'll resume the sell-off and get a lower high. I'm hoping it's above 100,000. And then I think we'll come back and take out the 200 week as it rolls over. And I have that dotted line there showing that scenario. My target levels are 12,000 to 25,000. That's an 80 to 90% drop for Bitcoin. People get so outraged when you say that and how stupid you are for daring to say that. But yet that's, all the bear markets for Bitcoin have been approximately 80 to 90%. The smallest one was 78.5%, which was this last one. I think you'll take out the 200 week because we were closer to it. Here we were much further away from the 200 week, which was associated with the bottom with the 200 and 300 week moving average. I think you'll bounce off of it and go get a lower high for a bear market rally, eventually take it out. And I think that because we're going to have a dot-com style bust in the stock market. We're going to have a very bad recession and a banking crisis. Bitcoin's never experienced any of those things. And I think we have the crash to kick off the bear market as I correctly predicted back at the top would happen. I'm the guy that was calling for minimum objective target of 60 to 63,000, told how stupid I was for saying that, and yet that's where we bottomed out here so far, was at 60,000, a 52% drop. How did I know that? Gee, that's what Bitcoin's done in the past. It's not rocket science, man. Over here we dropped 52%, then the bear market rally, and then the bottom fell out of Bitcoin as the selling resumed. You're likely going to see something very similar to that. I do have a momentum signal here that's trying to turn bullish. The trend is still bearish. Here, again, the bar is turned bearish. After the week after the top, we had a topping signal right of the week of the top, but you can get multiple signals. We had multiple signals at the top. We had multiple signals at this top. We had multiple signals at this bottoming process here before the final run-up. The last crash to kick off the bear market, you have multiple signals mark that bottom before we get the bear market rally. So we could see multiple signals here. And the final print on this bar, we only get one bar per week in the weekly time frame, so the final print won't be until Sunday. This is suggesting momentum turning up for a possible reversal or more likely a larger bottoming process. I had other signals. In the weekly time frame marked the very weak of the top here with the bars turning red. They've been red ever since. They're still red. There's no bottoming signal. There was a reversal signal at the top. And again, the signal was warning of either a complete reversal or a pullback. It ended up being a complete reversal. Again, bars are still red. There is no bottoming signal. Sometimes the signal forms after we move away from the bottom. Other times it forms near the top or bottom. I think it's still likely the bottom's not in and we still end up going lower. But my signals, which are correct, did an outstanding job in marking the top, marking the reversal, marking the bull market, marking the start of the bear market, because I have good indicators. But I had several signals mark the top, either the week of the top, like right here, or the week after, and signals did a very good job. Here's our 200, 300 week moving average here. The bars are still bearish. Well, momentum has turned back up in the weekly time frame on some signals, just as it did back over here and over here with the counter trend. Again, those signals were canceled out as we went sideways and we resumed the decline with bars turning bearish. So to here, we're trying to bounce. Some momentum signals are turning bullish in the weekly time frame, but the trend is still bearish. And again, here, we're just looking at momentum. Had a major topping signal at the top. Again, these were just minor signals. Here we have a minor signal that's given us this bounce. Trending signals in the weekly time frame are still bearish. Here, momentum trying to turn bullish this week, but here the momentum line's still bearish, still pointing down. The trend is still bearish. Momentum turned bullish right here briefly, but then reverted right back to bearish. The bar actually even turned green, but got rejection and could not flip the trend. Momentum even turned, the momentum line even turned bullish. It was just nothing more than a counter trend rally. Again, you're likely going to take out 60,000 and likely drop below the 200-week moving average. This signal could go away by the end of the week, by Sunday's weekly close. Even if it doesn't, it could be followed by another bearish signal as we had back over here. And here we marked the top with momentum shifting, and it was validated the following week with a sell signal, and then after the final exit point, another sell signal at the final exit point. Those signals remain. And just quickly about volume. Now, we've seen volume tick up ever since we moved up to the July high. We began to see the volume increase. We began to see distribution volume on Bitcoin in the weekly time frame. Now, last week we got a green bar, but again, it was barely a positive gain. We gave back the rally, and we're likely going to get back the rally here with rejection at the key level of 74,000. But eventually, again, with the next push down, triggering the stops or the liquidation move, I think you'll see a liquidation bottom with the streams that we're seeing. The volume begins to sharply increase as stops are triggered, as liquidations happen. That creates a liquidity sweep by the institutions. They buy as retail dumps, but in order to get their massive positions, as I've talked about, they need another push down. I think you'll see more volume spikes increase here to create a bottom going into later into the month or maybe on into April. I think that's very likely. Now, as I've talked about in recent days, I've talked about the market structure. The structure changed and the trend was bullish. But up here, we saw a change in behavior where supply began to dominate and the structure turned downward. It changed and we broke the battleground levels of support. They became resistance. Greed up here was creating excess demand. I'm looking for a possible bottom down here. If the bulls defend this area, I'll be looking for areas of fear down in here that will create an excess of supply. I want to be selling Bitcoin or going short, not a recommendation to anybody buy or sell Bitcoin, but I want to be selling Bitcoin and going short when nobody else wants to. I want to be going long and buying Bitcoin when nobody else wants to. That's what the institutions do. When the structure changes, it's your job and my job to change with it, to trade the dominant force. Right now, that's down. It's likely going to be, the main movement is down. It's likely going to be, we're going to get another main movement back up when demand reclaims control. When that happens, the structure will turn back up and you'll get a counter trend rally, likely to a Fibonacci retracement. We'll be able to mark those once we bottom out. Right here, I've marked it from the 300-week moving average. That would take us the 50% down here, the 61.8 fib up here, and the 78.6 fib up here. But I'll be looking at these key levels of resistance. Now, if Bitcoin takes out 60,000, the low right here in the weekly time frame, and it drops down, you have the 38.2 Fibonacci right here. This is the red line right here. That is at 56,000. Again, I've talked about going down to the low to mid 50,000 area. That would be the 38.2 Fibonacci. If you take it out, again, you could go into this key support area in the low 50,000 area. If you wick below it, you have our 50% retracement at 44,000 right there. I don't think that we go below 49,000, but I don't know the future, and I don't want to rule out that we don't. But if you do wick below this area, you have the 50% retracement just there at 44,000. I think you're going to likely bottom in the 50,000 range area somewhere in all likelihood. The low 50,000 area, maybe the mid 50,000 area, that might be around our 38.2 Fibonacci at 56,500. Talked about, will Bitcoin bulls defend this area? This is the battleground right here, 49,000 to about 55,000. If we drop down through 60,000, will the bulls defend this area? Will Bitcoin prove strength right here? The most important indicator is the behavior of price at a critical level of support or resistance. How does price behave when it revisits a previous level of support or resistance? This is support, this area, this range that I've marked right here in between these levels. Right now, we've broken 80,000. We've taken out 74,000, and the peak over here just under 74,000. We've taken it out. It's now resistance. Do you see the red line? That's now resistance. If we come down and we take out 60,000, getting rejection at 74,000, how does price behave at this critical level of support? I think that the buyers are going to come back in. I think the institutions and the bulls will support this area. Myself, if we break it, you have that 50% retracement just underneath it if we wick down. Bottoms and tops form when Bitcoin meets a level that matters. This level mattered for the top. It was major resistance, and then structure broke. I warned you back at the top, 74,000 would be tested at a 41% drop, but then broken and going down to 60 to 63,000. My minimum objective target, I told you we may even go lower than that. I still believe we're likely going to bottom at the 200 or 300 week moving average or somewhere in this support area. Price meeting a level that matters, like this level of support just below, is extremely important to see how Bitcoin behaves. Do we slice through this level of support and it becomes resistance, or do we bottom and the bulls defend this area and we see demand reclaiming control with an excess of supply? At this level, Bitcoin must show its hand. Will it create a floor? As we saw a ceiling develop at the top, will it create a floor? Will the downtrend begin to lose momentum? Will we get a massive surge in volume showing further accumulation by the institutions as the retail traders sell, being stopped out or liquidated? Will the forced selling, if they push it through the 60 to 63,000 levels of support, if they push it down through, will the forced selling be absorbed by the institutions? I think it will, and I think you'll see all the selling create a bottom. Institutions will buy at a discount. You'll have short traders that will go, oh, we're pushing to new lows. Time to get short. Let's short the bottom. This thing's going to just keep going. And then you'll have other longs, early longs, that get stopped out. So you're going to have the longs being stopped out, creating selling. The late short traders piling on. That will create a liquidity sweep down here, and the institutions will buy. But they don't want to buy up here. It will push price against them. You have to wipe out retail in order to get a good price. You have to understand what is going on. This is why I think this level will be tested and why the bulls, the institutions, will defend this area. We will see demand reclaim control down in this area.